Have you ever wondered why some people use credit cards for absolutely everything while others are scared of them? Why banks keep calling you, offering lifetime free credit cards, and what actually happens when you swipe a card? Today, we are going to understand every major type of card in the simplest way possible: debit cards, credit cards, prepaid cards, Forex cards, what they do, how they work, their advantages, their hidden dangers, and most importantly, which card is best for your lifestyle? By the end of this video, I see you will understand cards better than most adults, even if you know absolutely nothing about banking. Let's start from zero. A card is simply a tool, yes, that helps you pay money digitally. Instead of carrying cash everywhere, you carry a small plastic or metal card. But here's the important part: different cards use different types of money. Some use your money, some use the bank's money, and some use money that you loaded earlier. That's where most people get confused. Imagine three situations. Situation number one: you spend money directly from your own wallet. That is a debit card. Situation number two: your friend lends you money temporarily, and you promise to repay later. That is a credit card. Situation number three: you first put money inside a box and later spend only from that box. That is a prepaid card. Simple. Now let's understand each one properly. A debit card is directly connected to your bank account. If your account has 5,000 rupees, you can spend up to 5,000 rupees. The moment you swipe the card, money gets deducted instantly. Simple. Now let's talk about advantages. Debit cards are easy to get. They help control spending. There's almost no debt risk, and they are perfect for beginners. But there are disadvantages too. You usually get fewer rewards, lower cashback, and weaker fraud protection compared to credit cards. Debit cards are best for students, beginners, and people who want strict spending control. Now comes the most misunderstood financial tool in banking: the credit card. And honestly, this is where many people get confused, because when you swipe a credit card, it does not feel like borrowing money. It feels like you are spending your own money, but you are not. Let's understand this very simply. Imagine your salary comes next month, but today you want to buy a phone worth 20,000 rupees. A credit card allows you to buy it now, even if you currently don't have enough money in your bank account. How? Because the bank pays first on your behalf, and later you repay the bank. So technically, a credit card is like a short-term loan that works instantly every time you swipe. For example, suppose your credit card limit is 1 lakh rupees. You buy a phone worth 20,000. The shop gets paid immediately. You get the phone immediately, but the money has actually come from the bank. Now, you owe 20,000 rupees to the bank, and at the end of the month, the bank sends you the bill to the bank. Now, here's where people get trapped. If you repay the full amount before the due date, usually you pay zero interest. But if you delay payment, interest starts growing, and credit card interest can become very high. Sometimes 30, 40, even 45% yearly. That's why some people love credit cards, while others fear them. Now you may ask, if credit cards are dangerous, why do smart people use them so much? Because when used correctly, credit cards can be extremely powerful. You can get cash back, reward points, airport lounge access, travel benefits, better fraud protection, and most importantly, a strong credit score. But there is one golden rule: never treat credit card money like free money. It is borrowed money, and emotional spending can destroy your finances very quickly. Imagine this: Rahul earns 40,000 rupees per month, but after getting a credit card, he starts buying expensive shoes, fancy dinners, new gadgets, not because he needs them, but because his credit limit is high. Within a few months, he cannot repay the full amount. Interest starts growing, late fees appear, stress increases, and suddenly, the credit card that looked premium becomes a financial trap. Next, prepaid cards. These work like recharge wallets. You first load money into the card, then you spend only that amount. These are commonly used for gift cards, travel cards, employee benefits, and pocket money systems. They are useful for controlled spending, but they offer fewer features and rewards. Now let's quickly understand some other important card types. Virtual cards. These exist only online. No physical card. Very useful for safer online shopping. Next, Forex cards. These are useful when traveling internationally. Instead of carrying foreign cash, you load foreign currency into the card. Simple. Now another big confusion: Visa, MasterCard, RuPay. These are not banks. They are payment networks. Think of them like highways through which your payment travels. Now let's talk about some very surprising facts about cards that most people have no idea about. Fact number one: when you swipe a credit card, the bank is secretly earning money from the shopkeeper. Yes, every transaction usually includes something called a merchant fee. That means businesses pay banks for accepting your card, which is why some small shops prefer cash. Fact number two: your credit card limit is not your money. But psychologically, many people start feeling richer after getting a high limit. And banks know this. That's why increasing your limit often increases your spending too. Fact number three: paying only the minimum due is one of the biggest traps because it makes people feel they are managing payments, while interest keeps growing silently in the background. Fact number four: some premium credit cards are made of actual metal, not plastic, mostly for luxury branding and premium feel. Fact number five: your credit card behavior can affect your future loans, home loan, car loan, even business loans. Banks look at your credit history before trusting you with bigger money. And here's one final fact that most people learn too late: rich people often use credit cards more than poor people. But the difference is, rich people use cards strategically. Poor financial habits use cards emotionally. So, which card should you use? If you are a student, a debit card is usually enough. If you are salaried and financially disciplined, a credit card can be extremely useful. If you travel internationally, a Forex card plus credit card is a powerful combination. And if you overspend easily, avoid keeping multiple credit cards. Here are the biggest mistakes people make: paying only the minimum due, taking too many credit cards, using credit cards for lifestyle show-off, missing payment dates, and withdrawing cash using credit cards. That last one can become very expensive. One of the smartest financial habits is this: use a credit card only if you already have that money in your bank account. So let's simplify everything. Debit card, you spend your money. Credit card, you spend the bank's money. and repay later. Prepaid card. You spend preloaded money. Cards are not good or bad. Your habits decide whether they become a financial weapon or a financial trap. If this video helped you understand cards better, hit the like button and subscribe for more simple finance videos. Also comment below, which card do you use the most? Debit card or credit card? In the next video, then we can also cover how credit scores work, best beginner credit cards, hidden banking charges, and how banks actually make money. See you in the next video.